Okay, before I move into the actual demonstrating the program itself, the software, if you like, I just want to go through the report, because this is something that is you need to understand. We all need to understand it. So one of the most important things, of course, is what we call the profit factor, and that's 3.2. In other words, for every one we lose, we can expect to win 3.2. Okay. Now, our percentage of total trades that are profitable is just about 60%, and the average profitable trade is 4,700. Yet our average losing trade is 2,100. The largest loss trade 6,200. The largest profitable trade 28,200. Now, I wanted to go through this report because if you do look at this, you can be frightened. But there's no need to be, because of what we call money management, and I'll explain that right now. Consecutive losses in money, 7,500. You could look at that and say, shit, I've just put 10,000 in the bloody account, it's had 2 losses, and it's it's reduced the account by 75%. I mean, that's just not on. I don't want to risk that. Well, what you've got to work out is that these are based on averages, and if we have a look right down here, we've got a lot size of 7.4. So therefore, when we lose, we're going to lose a whole lot more than when the lot size is 1. Now, the lot size is directly related to the balance. So, although that may say we had 2 consecutive and it came out at 7.4, that would actually never happen in the early stages when the account's at 10,000, for the simple fact that we're not risking anywhere near that amount of money, because we're only using 1 lot. And 1 lot with this currency pair represents about 7% of the account. So even if we did have at the beginning even 3 losses on the trot, which I believe would be highly, highly unlikely, but even if that did happen, we would only drop 20% in the accounts. Okay, so you've got to understand that these figures are based upon the average of the testing period, and as you can see, the lot size is increasing. In fact, I can quickly show you. Go 3. Oh yes, here we go. We obviously were up to 3.4 because the balance was 32,000, 33,000. But we took 2 losses, 2 consecutive losses, which the program then recalculated the risk, and we brought the lot size down to 3.2. Okay, so we won the next one, but this is called money management, where we are controlling the risk. The risk is always at 7%. So that's just to clarify that. So don't be worried that, oh my God, as soon as the money goes in the account, we start trading with 2 losses, we've lost 75%. That's that doesn't really mean anything, because we do have money management built into the system, yeah, as I've explained. So here we have the strategy tester. This is on the 1 hourly chart for GBP JPY, and at the moment it's not actually picking up any signals or price action. But what you can see here, these 3 lines, the green, red and the purple, they represent the moving averages as calculated by the program. And when these are in a certain formation, and the candles are in a certain formation, then the software enters the trade, which will happen quite shortly. Hang on a minute. We've now just got the sell signal. The stop loss, the red line, is now coming down as the software recognizes the volume there. We've got a slight retracement, but it hasn't stopped out. Our take profit at this point is somewhere between the red and the purple lines. bang, we've just taken a profit, and I believe that was about 47.50 pips. Okay, it's about to pick up a buy trade. There it is, we've got the signal. As you can see, the stop is moving up, the red line, because of the volatility of that large blue candle. It's moving sideways, and it's picked up again. This trade actually does quite nicely, and the stop is no longer here, it's actually between the red and the purple lines up here. And we can see this trade is actually spanning several days, but whilst it's rising, the software is ensuring that we are riding this trend out, and I think it's going to hit our stop quite shortly. This trade actually pans out at about 450 pips. Again, a slight retracement, but it's not enough to trigger the stop. Very sideways now, but we're not triggering the stop, so that's going to happen right now. There we go. We've now, we're just into another buy trade. Again, the stop, you can see it's moved a little bit. Okay, one thing I'd like to just point out here with manual trading is that the trader would have seen a 60 pip profit, and it reduced to about 20 before moving back up again. Now that would have been enough to make most people close the trade and take a bit of profit. And in particular at this point here, you can see we've actually been into a loss situation. So you've been 60 plus to 7 pips minus. A lot of people would have panicked and would have certainly closed that trade, but the software works on strict rules, and those rules have not been breached. And you can see now that it's moving up into a profit. The stop loss has now moved. It's now again between the red and the purple lines. It's riding the trend out. Where this trade actually goes, I don't know. I've got the notes in front of me. This is quite good. It returns about 150 pips, I believe. Here we go. We're going to stop out. Yeah, it hits that stop, and we take our profit. I'd like to point out that these trades are in sequence. They are exactly as they happened. I've not edited out the losses or anything like that. And we do indeed see some losses, and it's only fair to show the good, the bad, and the really ugly. We get a few in here, that's for sure. It's now the 14th of Feb, and we've just entered a buy trade. The stop loss is there at 60 pips. Seems to be struggling. Okay, I don't know where this one's going. It doesn't ever really take off, and it indeed moves down to the stop, which had reduced to 30 pips. Our next trade coming up is a buy. It's on the 16th or 17th of February. Yep, it's just been triggered. We've got our stop at 60 pips. It's moved up a little bit because of the volatility. We're now at break even. Okay, this one's a winner, I think. Definitely. The stop has trailed up because of the volatility. So we're now at a guaranteed profit. Our emergency stop's at 56 pips, and we're now at about 135 pips up in this trade. You can now see that the stop is now active between the red and the purple lines. This is a moving stop, what we call a trailing stop, and we've determined this using the moving averages. That's the reason that this software rides the trends quite nicely, very well in fact. We're now sideways, but we're not hitting the stop. It could do anything. It could rise again, it could come down, trigger the stop. Okay, we stopped out, and that was quite a hefty profit. That one was for about 5,000 because the lot size is actually at 1.7 at this point. Remember I mentioned the variable lot size? Well, as the profit. I mean, the account now stands at £22,056, and accordingly the lot size has moved up. It always remains at 7%. Oh, we're straight into a sell trade, which actually triggered the actual hard emergency stop. This is always the risky part. That's at 60 pips. I mean, these happen. There's absolutely no way you can predict that, and of course every system has its losses. But I have noticed, and maybe you have too, that you'll see that whenever we hit a hard stop initially, it has to have a lot of momentum to do that, and there's something I'm looking at which will be triggering a reverse trade if our hard stops get hit. We've just hit a buy and we stopped out immediately. Okay, but we've now entered another one and it's moved the stop. It's in profit, definitely. And so the video is now coming to a close. It actually, in full testing visual mode for 6 months, it takes about 35 minutes to complete, but I'm sure you agree it's an excellent method of testing software for trading, because we can pause, stop, forward, just about do anything and see the price action and get a really good idea what's going on in the software and what's going on. And this trade just closed, and this was a biggie, 5,500. We've in this short video we've seen the emergency stops get hit. I mean, that happens. We've also seen the software control the stop so that it trails, and so we've hit a reduced risk stop, and we've also seen the software created a take profit stop, which is the way that it rides the trends. Anyway, thanks for watching. Cheers.